Hi, welcome to the Oak Trader Report. These charts are put together on the 12th of January, and today it's Monday, and it's just gone past, I believe, about 1:30 in the morning Hong Kong time. So it's about 1:30 in the afternoon on Monday New York time. Just covering a couple of sectors here in the American markets, plus a Dow monthly chart at the end, just to go over and see where we are in the markets at the moment. Ticker symbol here, ATE. Big downtrend, and you've had your gradual downtrends being broken. The only thing I'm not particularly happy with about this stock is there's quite a large gap here. The parameters on the chart, $15 to $20, a $5 gap. So you see here the market coming down. It's in quite a steady downtrend. I wouldn't be going near this stock unless a line was drawn here and it broke over that downtrend that was developing at the moment. And even if it breaks that downtrend, I still wouldn't look at it seriously until it really flattened out and it at least moved over this sideways congestion period here where my mouse is. But I believe this one's definitely worth looking at on the watch list. It could be a triple bottom here, 1, 2, 3, or it could be a double bottom if you wanted to be strictly technically perfect and not classify this. Both these two as a double bottom, but this well could make another double bottom here and dip below 10, shake a few people out. But we're going to be watching this and see how it develops over the next 6 months to a year. LTXC. This one, the parameters on the chart are quite a bit bigger, but I believe that if you look at this action over time, and if you look at it with a zoomed in magnifying, like we'll do with the next chart, you'll see here that the price action is extremely tight with a slight trajectory downward, which I like to see. And if you draw a line where my mouse is here, just after 2010 February time, you draw a line all the way down. This trend line, this movement up, has broken that, and it doesn't look that violent, this upswing, but on the daily chart it's quite a big move up. It could have another setback from here. We'll look at it on this chart, and you can see for yourself this is the weekly, so we're zoomed in a little bit more, and this was the downtrend line I was drawing from 2010. You draw it all the way down, and here it breaks out, and if you look here, it's quite a nice triangle bottom, well, a triangle consolidation area. Pretty much a triple bottom with a good shakeout here to really trick people that the market was moving down, and then lo and behold, surprises of all surprises, the market moves up, tricking most people who follow price action too closely out of the market. But you see here, when it normally breaks up so violently, although I have seen stocks move much more violently, it's broken up from 6 and it's sitting up near the $9 level at the moment. We could be looking at a setback here to shake out a few more players. It depends on how many people got shaken out with this shakeout here and how many people got negged out while the market was moving up and this stock was behaving like a dog. How much they managed to accumulate will depend on how quickly this stock moves up. But I'm going to be holding it from here, and as I said, if we do see a setback, a shakeout, I don't think the shakeout would be down to much more than $6.50 or $7. But again, always be wary. Never, put everything into any one opportunity. Okay, ticker symbol here, INTT, and this is a daily chart here, very tight, 10-cent range, just to show you how extremely tight this market is. We'll look at a longer, further out chart afterwards. You can see a nice uptrend developing, and to me, this is a daily chart, and this just looks like consolidation. You've got 1, 2, 3, 4, 5, 6, and going into the 7-month now, building up power for a further move upwards. Now, of course, if this continues going down, I may well change my opinion. If it breaks the $3.70 level, it could well just be a shakeout. We have to be careful from here and just watch the market. But if you draw a line from the top here and you draw it all the way down, I feel once it breaks that level at around the 395, that'll be the perfect time to go long this stock for a further move upwards, and we'll probably see a move of the same equivalency of the move that happened back in May from $2.90 up to 420, and it could be a slightly bigger move this time on the way up. But again, with this dip down here, this pivotal point lower than this pivotal point, I'm always a little bit more cautious, so I'll be watching the $3.70 level. But again, they do like to play tricks to try and shake people out, so if there was a shakeout here, it wouldn't put me off the stock forever. And the reason it wouldn't put me off the stock forever is because I believe it's developing into quite a nice weekly consolidation here. If you start the trend line here and you draw it down, you can see that this area here is where it breaks out the $3.50 level. And if you draw a line at the bottom, it's not a perfect triangle formation, but it's pretty good. And you had a nice accumulation area back in 2009. It went up, and for a weekly chart, being a 50-cent parameter chart, this is pretty damn tight. So this is the action where my mouse is that you were looking at on the daily chart I showed you. We looked at the uptrend and now the sideways consolidation with a downward trajectory, and this was the line I was saying I'm waiting for it to break out of this line, and that will prove to me that the technical strength is developing for an upward trend in this particular stock. But it's looking very, very positive at the moment. And again, I don't like to see these kind of spike ups, even if it is a 50-cent level. That usually signifies, when you see spikes up like this, that there's further accumulation to go. And I quite like the look of the tight price ranges here in the last year and a bit. And the price action, if you look at how tight the price action is here and compare it to, say, back in 2011 and 2010, the price action is looking much more like accumulation here. And I think some of the larger players are picking up some nice positions. And you can see here with the volume, with the price action, it looked like a bit of distribution was going on. And then they've decided to reaccumulate it here from 2012, and you can see with this accumulation here it was slightly higher than this one, and you can see that the volumes dropped right down. So this stock isn't widely held amongst the public, which is another very, very positive sign. And this is it on a monthly chart. Big looking head and shoulders here if we really wanted to go over the top with the chart analysis. 2002, 2007, a huge shoulder, then the head here, and then the beginning of this shoulder here. And the price action in this shoulder from 2010 onwards, if you look at this chart, it's only a $2 parameter. It's pretty much been in a range of, say, $2.50 price action range for the last 3.5, 4 years. And if you compare that to this range, where it was a $6 to $8 range, the market's calmed down nicely. It's broken a lot of downtrends, and I'm getting ready for a humongous move upwards. And I suspect that this market in the next year or two should have the technical power, unless something goes wrong with their campaign, it should have the technical power to at least push above 6, and I would say moving up to 8. And I could see this somewhere in the next 2 years sitting at around the $8 to $10 level quite easily. But again, you know, it could always have a nice consolidation area at 6, maybe for another year or two before it develops its uptrend. But from here, the uptrend definitely looks to be about to start. It could take a little while longer with a further dip down, but again, longer term, keep watching this one, and I suspect it will move much higher, especially when it breaks out of this triangle that we saw on the 5-year weekly chart. Ticker NVMI, and you can see here again we've got the same similar type of triangle consolidation action on a weekly, like a lot of these electronic measuring sector stocks have. The ones that haven't already really kicked into a full-on uptrend, and you can see it break in this triangle area here at 9. You draw a line down there, and you've got a nice triangle longer term, a 3-year triangle. Generally should be good for at least a couple of 100%. Watch it from here, but over the next year and a half, we could easily see this stock at around the $25, $27 level. But Sometimes they do break down, 50, 100% into its move for whatever reason, and it decides to reconsolidate. But generally, a move like this should have the power to go to at least $18 to $20 over the next year. And here it is on the monthly, and you can see the big long-term downtrend being broken, the spike up, and then the accumulation phase beginning. And this is a stock I've studied for extreme shakeouts. And sometimes if there's too many people following, there's too much for participation, they will bring the stock that they're campaigning into a severe shakeout. So long as they're prepared and well financed for it, why not? Because you can pick up a tremendous amount of stock on a dip down like this after an accumulation level. And of course, this came during the recession, so the timing wise, if they, where my mouse is here in 2008, tried to start their campaign of pushing it higher, it would have been the wrong time. And you can see here that if you had bought here, which I wouldn't advocate, because if you look at my mouse and you draw a line along the top, it didn't break that trend line, did it? So it would have given us no signal to buy. It's only really when you try and anticipate it with a huge amount of money do you get hurt. But if you just wait patiently sometimes for the trend to develop and define itself, that usually will save you from being caught out with shakeouts and downward moves like this. And of course exceptional circumstances during the recession, but a nice curve action coming around. And then we saw the market's true colours in 2009 and 2010, and some distribution here in 2011. But it looks to be developing into a further consolidation action here, as we discussed on the weekly. Don't like this bit of price action here, but it looks much tighter here, much tighter, and it's all happening above. If you look at it like stairs, 1 stair, 2 stairs, 3 stairs, and use those as your resistance and guidance points. But this definitely looks to be breaking out on the upside. Of course, watch out for a shakeout, but this stock, I believe, should be good to go up to around the $18 level at some point in the next year or two, with the power it's developed in this weekly triangle that's broken out. But again, we'll have to wait and see how the future develops. But I do believe this is a good looking stock. ORBK weekly chart here, big downtrend being broken. This here is a $5 parameter, but if you look here where my mouse is, this isn't an accumulation action. I would have got caught out on a flat line. Look at where my mouse action is. It's going up $5, coming down 5, going up 5. Then we saw a little bit of a tighter range, but then we had about a $7 range here in 3 or 4 months, and then bouncing up again. To me, this wouldn't have signalled accumulation because there was far too much action. And of course, if you drew a line from here down to here, it never broke any uptrends, it never broke out of any consolidation areas. And if you drew a line along the top, it didn't break that. And then if you followed the line down, it didn't break out of that downtrend line up, so we wouldn't have got caught out here. But if you draw a line all the way down here, it's kind of a perfect signal to be long the market. Not necessarily that the uptrend, the big uptrend that's going to last many years is about to happen, because there hasn't been enough base action and accumulation action for the cycle to develop in that way. And this is what this process at the moment is all about, from really 2010 onwards. And this is on the watch list here at the moment. It's quite a nice looking chart. If you draw a line along there, it's broken that downtrend. And if you draw a line where my mouse is here along that line, it's broken that sideways line as well, and it's just sitting above it. So I suspect that this market will move up to around the $15 to $20 level over the next year or so. Of course, it could be subject to a setback, and you always have to factor that in to what you're doing with your own portfolio. But I'm looking at this to move up to around the $15 to $20 level in the next year or so. But again, it's not entirely perfect, this action here, and If you look back to 95, 96, 97, I mean, that's beautiful. You draw a line along, it breaks the downtrends, gradual downtrends, sideways downtrends where my mouse is, and then we had a huge move up. And if we just refer back to some of the charts we were looking at 3 or 4 charts ago, when you have the big move up and then it decides to come back down, you have a little bit of distribution, but they realise they can push the stock much, much higher. That's what we're seeing with those charts as well on the weekly 5-year consolidations. And then you have another leg upwards. Of course, this was an extreme leg up because of the technology boom in some way that this company was related. But look at the distribution action compared to the very narrow price action, accumulation action here. And this is a very good example of the cycle: accumulation, markup, consolidation, markup and distribution, and then this cycle, the markdown, and then here the new phase of accumulation begins. And it's definitely one to watch, and I'll be checking this out quite thoroughly over the next 2 or 3 months. On to the semiconductors, I believe, VSH, quite a long stock here, big head and shoulders, and the dip down, and then you've got your other head developing, your other shoulder developing here. And if you, where my mouse is here, you draw a line up, that's the sort of angle on the downside. If it breaks that, be extremely careful. It has broken a sideways pattern here, and if it stays above that, I'll be pretty confident. But this is the real key, where my mouse is here, the early part of 2011, you draw a line along here to mid 2013 and draw a line down. When it breaks that at around the 14 bucks level, that will be the time I think we'll see some movement in this particular stock, and we should see a decent uptrend developing sometime in the next year or two. But it's not a great looking action here, it's quite wayward, and you've had the market move from say $7 up to 20 and then come back down again, so it's not exactly how I would like it. But if you look back to here, that isn't exactly how I would like it as well. I mean, this is an extreme example, and I doubt that this would happen again in this stock because of the cycle in terms of the enthusiasm for this particular sector. But back then the enthusiasm was massively high. But again, if this got some good momentum, we could easily see this, I believe, up at around the $20, $25, $30 level in the next couple of years, potentially. Okay, this is the monthly on the Dow, and you can see here the stages. I talked about this before in the Oak Trader report. It's very hard to see or to judge really what the Dow's doing because it's not a true market. You know, the dogs drop out and new ones come in. So it's constantly being jigged, not like the S&P 500 in some ways, which is more of a true price market. But if you look at this here, from the low in 2009 March, you draw a line up, you've got one stage here, maybe the second stage here, maybe the third stage, and then this, the fourth stage, potentially. But looking at it further, about 3 months ago, I was talking that I'd misjudged a stage, and I'd noticed that about 3 months ago. One, and I counted this perhaps 2, and this here, from here to here, is the third stage. So this is the third part of the bull cycle, potentially. The consolidation where my mouse is here, is this going to be the last fourth cycle? Or is it the fifth cycle? It's very hard to judge, and as I said, individually on a stock by stock basis, that's how I concern myself with my trading, rather than trying to think about what is the Dow going to do. I always think about it, it's very hard not to, but what I mean by that is I don't think about it too hard. It wouldn't stop me buying into a good picture. You know, so long as the picture's good, then I'll buy into it, because sometimes the stock market, you know, we could be looking at 6 months or a year away from any sort of really serious correction. There's a correction going on now as I speak. When I started this broadcast, it was down 100 odd points, but as you can see from the chart, if you look back to where my mouse is, it began the year 2013 at around the $13,500 level, and even if it was to shake out potentially back to 14.4, it would still be in that uptrend. If we draw a line moving up, it would still be in that uptrend. But again, I am expecting some sort of shakeout to happen pretty soon. With Obama, I believe it's next year, will be due to leave office, and then you've got Yellen being introduced to the Fed. Sometimes they like leaving all the new crises with the new people because they've always got a great excuse. Well, it wasn't us, it was the people before. And the people before, you can never interview them or find them to ask them any questions, and then they pop out of the woodwork 2 or 3 years later. So it's a very traditional way of doing things, and definitely this market at some point needs a correction. But again, there's plenty of stocks that are looking very, very good at the moment on the American markets, but also there's plenty of stocks that are in really strong uptrends and have had huge percentage gains. So if I was to make an estimate of where we were in the cycle, I would say that we were 80% into the bull cycle. I potentially don't think it's over. If you look back to say I think it was 1937, reading about history, that the market's turnaround in 1937 wasn't as volatile obviously as 1929, because in 1929 you had a lot more margin traders and speculators. So in 1937, a lot of those people had been busted out of the market, were disgusted with it, hadn't traded it for a number of years. So you didn't have the huge spikes and parabolic moves that you saw in 1937 compared to 1929. And perhaps this will be the same in some ways. Perhaps it will just limper down. But with what's going on at the moment, I can't see anything that would really affect this over the next, say, 2 or 3 months, because the action we've had here, it's broken up out of it, and even if it came back down to 14.5, we'd have to just see what price action develops. And I will always use this trend line here. You draw a line up, and once it breaks that main trend, which is at around the 14.5 level in the next, say, couple of months, if it did break that, then yeah, that would be a concern. But until it really breaks that level, there's nothing really to panic about, because the market will always give you time to sell out. It will always give you clues. You never have to do it tomorrow. So long as you're keeping an eye on price action and distribution, nothing should ever come as a huge surprise. And if you draw a line here, if we look back to this limpish bull run, that this bull run has been, it's making this one look pretty tame in comparison. If you draw a line along here, this shakeout here was the signal, and then the move up and the distribution a little bit here, but also following the market in terms of individual stocks would have told you that they were about to distribute as well. But longer term trend lines can be extremely powerful. If you draw a trend line back from 2002 all the way up, that big dip down at the end of 2007, beginning of 2008, was really the signal. The big trend line had been broken, and that was the signal, it's time to look at selling some stocks if you hadn't already, because of this distribution action here. But again, this to me looks like we're at least 2 or 3 months away from anything like this happening in terms of a huge spike down. But we'll just have to wait and see how the price action develops. But don't let the main market put you off looking at longer term stocks. A good picture's a good picture, and they'll always in terms of looking at the probabilities, buying into a market with a very good picture will always make sense in comparison to speculating and trying to look at the market too closely. Okay, that's it for now. Perhaps we'll just have a quick check of what the Dow's doing here. This is a very, very short-term chart here. It's a week chart. which bar chart I have. It's a 5-day chart, and occasionally I look at this also with a company in England called IG Index. I look at some of their hourly charts, minute by minute. I can't believe how far in they go sometimes, you know, second charts as well. But you can see the big shakeout we've had here in the market, and every time it's come back down, it's gone sideways and with an upward trajectory and moved back down recently. So we'll just have to wait and see how the price action develops from here. But I wouldn't be too worried, and I don't think you know, the bottom's going to fall out of the market tomorrow or the next day. We're going to at least see a month or two of price action that will give us plenty of warning, you know, before this thing begins to crumble. Okay, that's it for now. Have yourself a good day, and I'll speak to you soon.